Hey traders, welcome to this video. Just thought I would run down on the SPX, obviously, with very good reason. The move you're seeing at the moment is absolutely fueled by a lot of fear. A lot of fear. I think a lot of investors feel that the AI boom, the tech boom is overdone, overcooked. And you can see that in a miss in earnings. There's also fears that the Fed's waited too long to cut, all sorts. You would expect, like we said for a long time, that ultimately you're going to get a big retracement. You're going to get a retracement to some degree. And it could be the case that that's occurring now. So any kind of entries you take have got to be on the understanding that the value for longs, because of this long-term move, is low. Okay, it's still low at this point. There is value there to a degree, but you've got to understand that you started rising here and you've gone all the way up there in one move. So there hasn't been a significant kickback. Now, if you're someone who's looking to invest in the US stock market because you believe in the index as a whole, you believe in the US economy, which is, supposedly robust. You get, supposedly that's been the rhetoric, but given what we've seen lately, it could be a different story. Don't forget, if you want to learn to trade, go underneath this video. Free training's there. So you've come back about 23.6 on your fib retracement. You're just shy of your 40 MA. So for me, if you're a long-term investor, really, you're going to want to pull down probably at least your 38.2. I'm not saying it's not a long now. I do believe if you're an active trader at your desk every day, like myself and my members, my co-founder, then that's probably more ideal for you here. But if you're a long-term investor who wants to buy and then wait and hold, you're probably going to want to get at least a 38.2 fib, because if you look at the scale, let's say the market does beat this all-time high, you're not going to get a lot of profit on a long there, and you might even have to hold it if the market goes down further like this. You're going to have to sit on it for a while, which isn't going to be ideal. So you could buy it now, but if you're going to do that and you're an active trader, the size has got to be absolutely minimal. The exits have got to be early. Scoot down to your lower time frames, maybe kill it, 100 points higher or 80 points higher, nothing major. But if you're really going to sit on this and you want to go into 2025, 26 because you believe in a long-term all-time high, like you've had consistently forever, pretty much, then I would probably start to buy near about 4,800. It's just a little bit too early for me at the moment. If you want to short this, any pullbacks to the upside are ideal. Just be careful. I don't think particularly this sentiment is going to wane immediately, but if it does, you may end up at all-time highs again on continued soft landing rhetoric. So you could hold off any shorts, but I would say, if you're an active trader, this isn't for people who want to sit and do nothing, but if you're an active trader, then you're going to be wanting to look for something like that. Okay, so any reshort's probably about 5,400. Investor longs 4.8. And even if you do break through this level, I still wouldn't buy until about 4,850, even if you're an active trader. Thanks for watching. See you in the next one.